What is up, guys? Welcome back to the channel. Welcome to another morning coffee and cryptos. I am Gary Gilgan. Thanks so much. We're going to talk about some cryptocurrency today. Going to have a little bit of coffee on a beautiful August 15th, 2009. Every market, to be honest with you guys, today is a freaking bloodbath. The Dow Jones down 700 points yesterday, but the real losers for yesterday, the past 24 hours, has been cryptocurrency. Bitcoin down almost, a little over 1/4%, but man, Ripple down 0.5%. Why is I'm not showing that? Let's see. Oh boy, we're gonna have to go to my not most favorite. So yeah, Bitcoin down almost 5%, Ethereum down 10.5%, 10%, 9%. It's just a bloodbath. EOS down 11%. This is an emerging market. This is a very low liquidity market, so it's very easy for these individuals to manipulate these markets, and that's what's happening right now. And that's really this particular episode is just going to be a little bit different because today is such a bloodbath. I really want to instill some principles in you, or hopefully impart on you some principles that if you can adopt, then only then can you be successful in investing. So understand, for me, I'm an investor. I'm a long-term investor. I'm 2 to 5 years. That's the time frame that I'm targeting. So I'm constantly buying. I bought Ripple yesterday at 26 cents. So I'm constantly looking for opportunities to buy and to accumulate because, again, my targets are so far from where we are right now. I don't care. Excuse me. I don't care about the volatility in the market today, tomorrow, this week. I care about where the market's going to be in 2 to 5 years. So because I have been practicing and conditioning these principles that I'm going to share with you in this video, that if you can adopt, then you can master investing, especially cryptocurrency investing, because it is so volatile and most people are in it as speculators, short-term speculators. And when you have a price drop of 5%, 10% across the board, 11%, let's see what the big losers are. Let's see if we can even find it. Oh, dang it. Gainers and losers. I'm certainly not on my game today. Biggest losers, 50% losses. These, again, the reason why you don't see these types of fluctuations in equity markets is because there's trillions and trillions and trillions of dollars in equities markets. Not to mention the derivatives, the options, all this liquidity that's in that market creates stability in the market. Right now, total market cap is $261 billion. That's not a lot of money compared to $1 trillion. It's only 1/4 of $1 trillion. It's nothing compared to a quadrillion. So again, those principles. So let's look at the Dow. Do we even know what we're doing right here? I think I might have. Well, we're going to have to skip that one for today because I think you got the wrong chart. Sorry, guys. This is semi-live, just recorded. So this is how you do it. This is how we do it. I share silver and gold. Silver and gold. That's how I got my start in investing. Was in silver and gold. You're probably going to hear me say that a million times. That story. This is how I got my start in investing, was in gold and silver back in 2006. And for the reasons why today, civil unrest, economic unrest, Crazy stuff's happening, guys. So again, overvalue, undervalue. Metals super undervalued. Crypto extremely undervalued. Equities overvalued. Real estate overvalued. So how can I multiply my capital the quickest so that then I can invest in cash flowing assets? Okay, so silver, I mean, we're hitting yearly highs every day, more and more. And gold, again, same thing. Same thing. I mean, just highs. I think these are just all-time highs. Just all-time highs in gold. I mean, this is the beginning. This is the writing on the wall. When people around the world stop trusting governments and stop trusting government-issued money that's backed by nothing, it's backed by lies. Okay, it's backed by lies. I don't have any dollars on my desk, but it's backed by the good faith of the United States government. And people are starting to find out more and more that the United States government, we don't know if we can trust you. And people all around the world, look at what's going on in Hong Kong. People are waking up. They're starting to look at the government and think, why do we need you? Why do we need you bossing us around, telling us what we can and cannot do when we're more than capable of taking care of ourselves? So what happens, again, historically, is when people start getting out of government-issued money, or currency, I should say, they historically go into gold and silver. But since 2009, with the emergence of blockchain technology, Bitcoin, and cryptocurrency, now there is another safe haven that people are jumping into, again, when they don't trust their government, and that is crypto. So Bitcoin is testing. I'll get better at this, guys. So thanks a lot for hanging with me. Bouncing off, we're about to test that 200-day, or excuse me, the 100-day. I mean, I just look at it. It just, again, I can't wait to share it with you. Just be patient here in a minute. I'm going to tell you. But Ripple, in my opinion, it sucks, guys. It does suck. It hurts. I want a freaking Lambo. Who doesn't want a Lambo? It's like Oprah. You get a Lambo. You get a Lambo. But only if you can practice the two principles I'm going to share with you. So, man, XRP has fallen behind its yearly, I mean, actually, yeah, 1 year, dang, I mean, almost to the day. Yesterday, 2 days, it's fallen below that support line. This is so I mean, you got to keep your eye on this. I did, like I said, I purchased some yesterday, but I'm keeping my eye on XRP. Been some interesting developments as far as the SEC and some people trying to take, or they are actually taking Ripple to court. So I don't know. There's so many moving parts in every market. So people, I just was reading an article earlier. We're talking about, does the stock market really affect Bitcoin or cryptocurrencies? And there's just so many moving pieces that you don't know exactly what's affecting the price. Again, why I'm an investor, why I'm a long-term fundamental investor. Look at the wealthiest people on the planet. The wealthiest investors on the planet are all long-term fundamental investors. They're not traders. They have a keen sense of long-term patterns and cycles. And it's playing out in crypto. There are patterns and cycles, and long-term is an emerging market. It's going to change everything. Okay, so in my opinion, and this is just my opinion, do your research, is XRP is a deal, freaking screaming deal at 26 cents. But we have to really see what happens. Can we get above that trend line? Can we get above that trend line? I'd rather be sideways above that trend line than in a descending momentum. EOS broke below its little trend line I drew, is trading a bit sideways for a while. It's now broken through. So you just gotta take it day by day, guys. Just take it day by day. Tron, same thing. Now sitting at 1 cent. What? 0.017 cents. Again, it's a deal. A deal. Tron is now the second, number 2 platform for transactions per second, users on it. In fact, Tron has the number 1 DApp as far as users and volume on it. So for me, this is EOS and Tron. They are the new platforms that the new internet is being, all these new technologies are going to be built on, are these types of platforms. Okay, so now let's kind of talk about the two, what I've been kind of alluding to, so I don't take too much time on this video. But you know, in these times, again, I got into cryptocurrency in June of 2016. I call it luck, call it what you want. I call it, well, luck. But I got into Ethereum at $7. I got into Ripple at 0.6 of a penny. I got into EOS at 50 cents. A Neo when it was Ant shares. I mean, so I went through 2017. You know, I went through 2017. I experienced that bull run and the magnificence, the excitement of a bull run. And I also went through 2018, which was, to be honest with you, the hardest year of my life. 2018 was the most challenging year of my entire life. And I mean, it's bled over into 2019, let's be honest. Okay. But I've trained myself to look for what is the lesson that I need to learn, because I committed in 2017. This is what I want to do. I want to be an investor. I want to be an entrepreneur. I want to be a coach. I want to be an influencer. So I want to be these things. What do I need? What character traits do I need to develop within myself so that I can influence others and so that I can provide value to others? And when it comes to investing, I would say the biggest lessons that I've learned in especially the past year and a half is foresight, the ability to see into the future long term. Okay, think about this. A drug addict, a heroin addict, or a crack addict, their perception of time does not go beyond their next high. They're constantly chasing this high, this reality where time is very fast, it's very fleeting. Okay, the average American cannot see beyond their next paycheck. Okay, they are overwhelmed with fear, worry, anxiety, stress, because they go to a job that's unfulfilling, that they don't like, doesn't pay enough. So they're constantly chasing their tail every other week. Okay, again, but a successful investor like a John Templeton, like a Warren Buffett, Ray Dalio, okay, they have the ability to see into the future, long periods of time, 10 to 10 years into the future. They can see these trends and then they invest in those trends. So I spoke about this a little bit earlier. There's many people in this market right now that are just getting freaking just eaten alive. Weak hands are getting just flushed out right now because they don't have the foresight. Okay, they got in on speculative hype. They got in thinking that investing in these cryptocurrencies is going to be a get-rich-quick scheme. It is get rich, but if you're getting in right now, if you've gotten in the past year, to get rich and be what I'm leading to next, patience. Patience. These cycles, they don't last 24 hours. Again, let's look at a day trader. Day trader looks in 24-hour time frame. I'm looking the next 2 to 5 years. Okay? So patience, understanding that these cycles, let's go back to Bitcoin. I mean, look at this cycle. These are cycles that they play. Overvalue, undervalue, okay? Run up, correction, run up, correction, okay? Especially in an emerging technology like blockchain and cryptocurrency, okay? In any new technology, it's going to have an exponential growth phase, okay? We're going to talk about that right here with Amazon stock, okay? Back during the dot-com bubble, or call it what you want, there was a period of exponential growth in price as this new technology went out of mass information and started becoming mass adopted. Same thing with Apple with the hardware, physical computers, and Microsoft with software. But Microsoft still just, hitting all-time highs still. Okay, again, though, the two biggest principles that you must adopt, you must install your being, is foresight, seeing long-term, understanding the fundamentals of what you're investing in, and patience, being able to weather the storm, knowing that this too shall pass, knowing that you've done your research, you've done your due diligence, and your target is 2 to 5 years. It could be 1 year, but I'm 2 to 5 years. So, Amazon stock history, the importance of patience. Amazon has an impressive stock price history, perhaps one of the greatest over the past 2 decades. After accounting for 3 stock splits, Amazon shares have advanced from $1.50 in May of 1997 to nearly $1,250 today. That's an 83,400% return. Nothing close to Bitcoin, but still quite impressive. But you'd be hard-pressed to find anyone outside of the founder or CEO Jeff Bezos who has been able to hold onto their shares for the entire ride. The stock has had its fair share of massive sell-offs. Consider what it would have been like emotionally not to sell during the following periods. April 1999 to August 1999, so not even 6 months, from $105 to $44, a 57% correction. Or December of 1999 to September of 2001, $106 all-time high to $5.97, a 94% correction. A 94% correction in Amazon stock. Do you think that emotionally you could have held on through that storm? Do you think that you would have the cojones? Well, if you had foresight, you had certainty in that foresight, you've done your research, you've done your due diligence, you believe in that investment, and then you have patience, the rest is history. While the 94% drop correlating to the dot-com bust looks painful, it's important to remember that Amazon was hardly alone in tumbling during the period. What to me seems particularly impressive would be if someone had held onto shares of Amazon during the 35-month period starting in 2003. It could not have been fun to see a stock in one's portfolio losing value over such a long stretch. And it hurts. I've lived it, I'm living it. Insights from someone who did hold that entire time. Here at the Motley Fool, we are lucky enough to have someone who has held Amazon through the aforementioned ups and downs, co-founder and chief rule breaker David Gardner. He recommended and purchased shares way back on September 9th, 1997 for a split-adjusted $3.19. An initial $11,000 investment would be worth, today, $4.3 million. Ask yourself, would that change your life? I know it would change my life a lot. So this person, David Gardner, had the foresight and had the patience to weather the storm. So I'm not going to read the entire article. I've already taken up enough of your time today. So I very much appreciate you tuning in today. I look forward to seeing you tomorrow. All the best to you during these interesting seas that we have right now. Batten down the hatches and keep investing. Have a great day. See you soon.